Hello everyone, Clifford Bennett, Chief Economist, ACY Securities. So as we forecast, the rally couldn't last. Well, I'm calling that a little bit early, but there's clear signs the stock market in the US is rolling over again to the downside. I'm a seller. It doesn't look good, and we've just had Tesla. Actually, I almost sold Tesla last night during New York trading. I thought, I'll just see how it finishes the day. And then it's dropped 5%. Some of those that just get away from us. I think there could be further downside for Tesla. But the US stock market overall is continuing to weaken, and it's not a good outlook, particularly as we had some housing data out in the US overnight. And would you believe that the mortgage bond or applications index in the USA is at a 23-year low? It's worse than at the bottom of the GFC. If that isn't screaming housing bubble warning, I don't know what is. As you know, we've been forecasting there was a housing bubble being created in the US market since the middle of last year. So that's over 12 months now. So we've certainly been ahead of the game. And today I noticed that the Wall Street Journal had an article on exactly this topic of how Fannie Mae, Freddie Mac are starting to feel the pain again of investors not being too keen. So I think we need to be aware, just a little bit cautious of the fact that we've already got stock markets falling and now we've got property markets falling, and this could all compound into another GFC style crisis. Now, nothing's a given, nothing's certain, but the writing is more than on the wall. It's in bright neons and it's lit up. So we do need to continue to play defense, as I've suggested all this year. What is interesting is how the US dollar has begun to strengthen again, and I do think there's going to continue to be safe haven buying of the US dollar, and some of that is going to go into the US stock market. So global investors, particularly Europeans, will be wanting to shift their money further away from the war. It's just basic common sense. And they're going to mostly shift to the United States, even as the US economy begins to crumble. So that is why the US dollar can continue to strengthen for some time. But as I alluded to yesterday, at some point, this US dollar bubble, it's just entering the bubble phase. It has a lot more to run. But when that bubble bursts, that will be an amazing trading opportunity. But for the moment, it's still a bullish US dollar. I'm still bullish the US dollar. I'm still long the US dollar. I think the Aussie, the Euro, Sterling are all vulnerable. But also, as I've recently alluded to, continue to look to Asia at some point to separate a little bit from this mostly Western economic and Russian-Ukraine war phenomenon. So I do see Asia as faring better. And one of the things I've been looking at is actually selling the US dollar against the Singapore dollar, even though I'm buying the US dollar elsewhere. So it's something to consider. Have a look at your charts there. Overall, though, economic data continues to deteriorate. We saw Australia's unemployment number come out today. It didn't deteriorate. It's been stable for about 4 months at 3.5%. What's interesting is that the number of unemployed increased, the number of people looking increased, unemployment stayed the same, but it is a very strong and damaging signal that not all is well in the Australian economy. Look, I don't want to put anything down on the hospitality industry. The hospitality industry works very hard to put up with us all when we go in and attend their restaurants, cafes, bars, etc. But you don't get the same service you once did. That pipeline of very keen sort of foreign travelers and even immigration that used to support a very high skill set in much of the Australian hospitality industry is a little bit more scarce on the ground. And so you could not suggest that these full employment looking numbers are actually a sign of a healthy economy. They're a sign of only one thing: low immigration, low traveling from foreign students in particular, or foreign backpackers as they're called. That's all that low unemployment number signifies. Still low levels of travel and movement of labour through Australia. That's what that signifies. Nothing to do with the economy. Elsewhere in the Australian economy, the anecdotal evidence is everywhere. I still am calling a surprise recession. By the time it gets here, it won't be a surprise, but to talk about it at the moment is still a little surprising to some people, but watch out for that. Now, if we have, as I expect, a continuation of the downward trajectory of house prices in the US, and they have begun falling just last month. In Australia, I note they've falling again this month for the 6th month in a row. So the United States is just starting to roll over. But what we're going to see is a falling property market and stock market at the same time in the US. But not only that, we're going to see the two largest economies in the world experiencing falling property prices. That sentiment, that property market sentiment, is very likely to spread globally. So I'm actually calling a peak in the global property market at current levels. So just watch for that sentiment to spread, I hate using the word, but like a virus around the world. And it's not a good outlook for either stocks or property, which means it's happy days for those people who are prepared to think outside the box. I continue to like the US dollar for now, and I'm buying more and more oil. I think that can go higher, particularly if my concerns about the Russian-Ukraine conflict intensifying should unfortunately come to fruition. So a lot going on and a lot of bleak economics, but we have the financial market skills and instruments and opportunities for us all there to play good defense for our wealth portfolio and to add to that portfolio by spotting what is a different kind of opportunity that now presents itself. Thank you very much. Have a good day. Clifford Bennett, Chief Economist, ACY Securities.